everybody, Stuart Heath here, CEO and founder of Harvard Grace Capital, with our weekly update on things that are happening in the economy and primarily commercial real estate. We like to call this feature Nerdy Numbers, but we talk about a lot of data points and what they mean. Today I highlight one of the sources that we use regularly, MSCI, who puts out great content. I get a weekly email, and then you can dive in to their data sets and look at their website and come up with a lot of good data for you to use in your own analysis. This article this week, it was in their newsletter this week, but actually done earlier in June, talks about the early warning signs of CRE price problems. And if you go through the data, there's really not a whole lot of early signs. There's a lot of things that they highlight, changes that we've all seen so far this year, like the spread between the 10-year Treasury and corporate bonds, the spread between cap rates and the 10-year Treasury, some real problems in transaction volume in the hotel industry. But then there's just really a lot of conjecture of what might happen, and then there's a lot of worry and of what impact tariffs will have on commercial real estate. No doubt there will be some if the tariffs go through as much as they were feared to be, at the most. But everything is really rather calmed down today. Actually, June 30th, the new trade deal between the UK and the US goes into effect. There's continuing discussions going on with Canada, Europe, and China, as well as probably about 100 others, but those are the big four for the United States as trading partners. So the negotiations are still going on. We don't know what the tariff regime will be, and they're all working under a temporary regime until negotiations either completely fall apart or they move forward. Well, everybody on both sides of the table wants a deal to happen, so likely when that's the situation, something's going to get done. And it's not likely going to be horrible and punitive. The stock market has already reacted to this with the swoon that began on Liberation Day, and as of today, end of Q2, the market is higher than it was before Liberation Day. So we had a real V-shaped recovery here. So what does any of that mean? My conclusion is this: the absence of data does not indicate anything. We can postulate, we can ask good questions, we can think the worst case or the best case. The absence of data doesn't mean that the end is near any more than it means that we're going to have sunshine and blue skies. It means that we don't have any data that supports the theory that tariffs are going to kill commercial real estate prices. That's just not the case. When the data supports that, the point of this article is that it will be too late because pricing data does seem to be rather lagging in the commercial real estate space. But until then, I can tell you in the deals that we're negotiating, we're not seeing that there's any pricing issues. So anyway, that's our thoughts. We'd love to hear from you. Thanks a lot.